This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we explain why a liability insurance policy only protects people other than the insured, and that third-party insurance only protects against damage to property that is not property of the insured. Finger Oil and Gas Incorporated, the insured, and Mid-Continent Casualty Company disputed coverage, and the magistrate judge in Texas granted Mid-Continent's motion for summary judgment. Finger Oil appealed the dismissal of its misrepresentation and breach of contract claims. In Finger Oil and Gas versus Mid-Continent, the Fifth Circuit on January 27, 2023, dealt with the appeal, where Finger Oil demanded coverage to its property because it was told it had coverage for damage to third parties. The Fifth Circuit resolved the dispute. Finger Oil is an insured under a policy issued by Mid-Continent which provides general liability insurance. On July 19, 2019, Finger Oil was drilling at its own natural gas well named Drew Shell No. 1, located in Jackson County, Texas, when a valve failed and the well blew out. In response, Finger Oil contacted Desiree Scringer, the commercial lines account manager at Marsh USA, Finger Oil's insurance agent, to inquire whether it was covered for the blowout. Because Scringer was unfamiliar with the policy, she reached out to an underwriter at Mid-Continent, requesting that it confirm that the insured has blowout and cratering coverage and to advise the limit. Mid-Continent's underwriter replied in an email stating the policy provides by endorsement for blowout and cratering that has a box X if the coverage is excluded. Since the policy is not X'd, that coverage is not excluded. Based on this response, Scringer emailed Finger Oil as follows, quote, "Per the underwriter regarding coverage, the blowout and cratering are included within the limit of insurance. Limits are $1 million per occurrence, $2 million in the aggregate. Please note that each claim is based on its own merit, and this is just verifying the coverage in place." Close quote. Finger Oil, without reading the policy or seeking advice interpreting the coverage, relying on Scringer's email as confirmation it was covered for the incident, hired several contractors to work on the well and incurred bills for these services in the amount of $641,590.90. Mid-Continent, however, read the policy and denied Finger Oil's insurance claim, which was for expenses incurred while repairing property from the well blowout and the cost to bring the well under control. Mid-Continent determined that there was no coverage under the policy for these damages based on two exclusions. First, Mid-Continent stated that the policy included an exclusion for damage to property owned by the insured, which excluded from coverage property damage to property you own, rent, or occupy, including any costs or expenses by you or any other person, organization, or entity for repair, replacement, enhancement, restoration, or maintenance of such property for any reason, including prevention of injury to a person or damage to another's property. Close quote. The policy also excluded, quote, "any loss, cost, or expense incurred by you or at your request or by or at the request of any co-owner of the working interest in connection with controlling or bringing under control any oil, gas, or water well." Finger Oil, unhappy, sued Mid-Continent, Eventually, Mid-Continent filed a motion for summary judgment, which the magistrate judge granted in part. It dismissed all of Finger Oil's claims except for the breach of contract claim to the extent it involved Mid-Continent's failure to pay costs and expenses for repair of the well. The magistrate judge granted Mid-Continent's motion later for reconsideration and denied Finger Oil's motion for reconsideration, thereby granting a full summary judgment in favor of Mid-Continent. Finger Oil, still unhappy, appealed the magistrate judge's dismissal of its misrepresentation and breach of contract claim. The Fifth Circuit agreed with the magistrate that Mid-Continent's statement that blowout coverage existed did not amount to an actionable misrepresentation, probably because it was true. Finger Oil's agent asked Mid-Continent whether it had blowout and cratering coverage, to which Mid-Continent correctly replied that it did. Mid-Continent's statement was more akin to a general statement that the policy included such coverage, rather than it was a misrepresentation of specific policy terms. Indeed, Finger Oil was warned in the same email to note that each claim is based on its own merit and that the statement was just verifying the coverage in place. The summary judgment evidence, therefore, did not support Finger Oil's misrepresentation claims. You can't really prove a misrepresentation if the statement made is absolutely and totally true. In Texas, insurance policies are contracts subject to the rules of contract construction. As with other contracts, courts interpret and enforce them according to settled rules of construction and must give the policy's words their plain meaning without inserting additional provisions into the contract. Accordingly, courts must begin their analysis with the terms of the policy because they presume parties intend what the words of their contracts say. The words of the policy are given their ordinary and generally accepted meaning unless the policy shows the words were meant in technical or different sense. The Fifth Circuit concluded that the magistrate judge did not err in dismissing Finger Oil's breach of contract claims. Recovering costs and expenses for the repair of Finger Oil's well was expressly excluded by the policy. The policy only provided third-party liability coverage. That's coverage for property not owned or controlled by Finger Oil. And Finger Oil admitted that the well was theirs and owned by them. The purpose of owned property exclusions in general liability policies is to effectuate the intent that liability insurance is designed to provide compensation for damages to property not owned or controlled by the insured. It does not, nor can it provide first-party coverage for losses sustained by the insured on its own property. Finger Oil provided no basis for the court to question the clear terms of the exclusion, nor does it dispute that it owned the well in question. It had no way out. In my opinion, this case should never have reached the trial court, let alone the Fifth Circuit. If anyone representing Finger Oil had read the full policy, it would have been obvious that a third-party liability policy only provides indemnity for damage to property owned or controlled by other than the insured, and is not a first-party policy, cannot be a first-party policy. It is the seeking to change a policy that covers third parties into a policy that covers the insured for loss to its own property. It just doesn't work. The Fifth Circuit and the magistrate judge before the appeal read the full policy, and reached the only decision available. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. If you do so, you can subscribe to the blog posting, and you will be advised of every blog posting, usually 5 a week, sometimes more. And you can also subscribe to the video of the blog posting on rumble.com or youtube.com. And if you found this video and or the blog posting to be interesting or useful to you, please tell your friends and colleagues so that they can also subscribe and also read and or watch the videos about these blog postings. And you might also consider joining my locals community or my Substack publications so that you can, for a very small fee, receive specialized training and information available only to subscribers to locals and to Substack. Thank you for your attention.